All right, welcome back to another episode of the Black Bullion Show. People keep talking about the K-shaped recovery that's happening right now within the US. Essentially, the haves are doing well at a skyrocketing pace, while the have-nots are doing the opposite at a similar pace. So what if I told you that there's another K-shaped recovery that may eventually bite Wall Street in the butt? Further uncertainty may help boost gold and silver prices in the future. So what sector is this K-shaped recovery occurring in? Find out shortly. But first, if you're new to this channel, please hit that big red subscribe button right down below. Also, please hit the like button. Helps to get this economic evangelism right on out there to the masses to bring more people into precious metals. So Peter Schiff has a new one out entitled Trouble Brewing in the Subprime Mortgage Market. So that should, flash some warning signals to a lot of us here, especially in the US. So let's get into it. Last month, we reported that mortgage delinquencies charted their biggest quarterly rise ever. Digging more deeply into the numbers, we find even more trouble brewing in the subprime mortgage market. Of the 8 million active mortgages, the FHA insurers, 17% were delinquent in July. That ranks as the highest level in history. That translates to about 1.4 million delinquent FHA loans. It's not just FHA loans going delinquent in the subprime market. Fannie Mae, Freddie Mac, the VA, and Ginnie Mae are also reporting a surge of delinquencies. The overall delinquency rate of mortgages on a 1 to 4 unit residential property spiked by nearly 4% in Q2, reaching 8.22% as of June 30th, according to the Mortgage Bankers Association's National Delinquency Survey. The jump in the delinquency rate was the biggest quarterly rise in the history of the survey. The FHA is part of HUD. According to its website, it's been helping people become homeowners since 1934 with low down payments, low closing costs, and easy credit qualifying. The FHA does not make loans. It insures mortgages issued by FHA-approved lenders. FHA-backed loans require lower down payments and lower credit scores than conventional loans. In effect, the federal government assumes the risk of risky loans to low and moderate income borrowers. The FHA serves as an important backstop in the subprime market. A FICO credit score below 620 is considered subprime. The FHA makes loans to people with scores well below that number. A borrower with a FICO score of at least 580 can qualify for a loan with just 3.5% down. With a 10% down payment, a borrower can qualify with a credit score as low as 500. An FHA delinquency rate of 17% is a significant warning sign in the subprime market. And in many metro areas, the delinquency rate exceeds 20%. Nassau County, Suffolk County, New York, and New York, Jersey City, White Plains, New York, New Jersey both have rates over 27%. The delinquency rates include borrowers who are behind and then entered a forbearance agreement. During the term of forbearance, 6 months, under the CARES Act extendable by another 6 months, the borrower doesn't have to make payments, but must pay the missed interest and principal payments in the future. For many borrowers, forbearance simply kicks the can down the road and pushes the inevitable foreclosure into the future. The RONIes, as we like to call it here, effects on some homeowners' ability to make their mortgage payments could not be more apparent, Mortgage Banker Association Vice President of Industry Analysis, Marina Walsh said, adding that delinquencies are likely to stay at elevated levels for the foreseeable future, which is pretty wild. The high subprime delinquency rate has not raised much concern because, unlike the 2008 crisis, home prices are rising. Thanks to the Federal Reserve, mortgage rates are at an all-time low, and that has pumped up a new housing bubble even as many homeowners struggle to pay their mortgage. As Peter Schiff put it in a podcast, a weak economy is actually driving a strong housing market. I'm actually going to skip down here and end here. An American Enterprise Institute's Housing Center explained it this way. It would be expected that those delinquency percentages will increase over time. At some point, a significant percentage of then delinquent loans would be expected to be placed on the market by owners under distressed conditions or become foreclosures and then enter the market. It is at that point we would expect buyers' markets to develop in zip codes with heavy exposure to FHA and other high-risk lending combined with high levels of delinquency. In effect, the housing market has split in two, with a boom on one side and a bust forming on the other. And guys, if you've been watching this channel for some time now, you know that I have been eyeing real estate like a hawk for some time, not for the near term, but for the medium to long term. I'm talking about maybe 2, 3, 4 years down the road, because I am looking at things like this. I'm expecting that home prices will come down a little bit further. So those who are stacking up that fiat and stacking up gold and silver to possibly convert it into real estate, that can be done with prices at lower levels, and with gold and silver prices at higher levels. So I do plan on converting some of my stack there so I can get some real estate, and I'm also going to be stacking up the tinder for the toilet paper there for some of that real estate as well. Now, in addition to this, as much as we're trying to put a band-aid over a gaping wound, homeowners and landlords are flashing warning signs to the rest of the economy saying, hey guys, we know we're trying to help people, we're trying to save people, keep them in housing, but as landlords, we can't pay some of these lenders back. What are we going to do? And pretty much up until December, that's, a pretty interesting question. What exactly is going to happen to these guys? And, we're only at the beginning of the stress in real estate. So I can imagine what things will be like after the eviction moratorium is up at the end of the year, post-election. So do you guys think that real estate is experiencing a K-shaped recovery? Let me know in the comment section below. Thanks again for watching. Hit that like button, hit the subscribe button. It's Black Bullion.